Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo Nightly video for October 15th, 2019. We're going to focus on financials because financials were the biggest leader of today's price action. Not quite. The healthcare sector actually was plus 1.82 in terms of the XLV, which is healthcare. And not far beyond that was financials. But if you looked at the headlines today, you might have missed the healthcare sector. I did that. Certainly, I focused on financials and made that mistake. Nonetheless, we'll take a look at the financials, especially those that had earnings, including JP Morgan. We also had Goldman Sachs, Wells Fargo, Citigroup, BlackRock, and a few other key names. We'll start with our Tuesday update, just looking at this financial bounce and the XLF. So we have our trend line. We've been talking in prior videos about this rising trend line pattern. We also had a bounce thesis or a bounce plan. Multiple stocks, including some of the financial names, were into support. And we'd recommend a little buy positions or long premium through in-out spreads or bull call verticals. And we're getting the push up not just to the midpoint, which is 2751, but up to 2850. If we get a full bounce, that takes us into that pivot or maybe even to 29 per share. But again, this is the broader XLF. And one thing to note too, we have, I guess this could be considered, the third pullback or the third little snapback. So in this structure means connect out the highs and the lows with trend lines and really just ignore the moving averages. Let's go ahead and do that while we're on the subject there. So we'll get rid of those moving averages just for reference. We don't want to use those. We're just looking at the trend lines within this little parameter. So we look at this into the high leads to a sell swing and back to the low, referencing about 26. I think it's helpful to look at the 26 and the 50s, really 50-cent increments as targets for the XLF, all the way to 28.50, and then short sell potential up here, especially as the volume dries up, and that leads to a short sell down, gives little bear traps. In other words, it gets short and then squeezes to the upside. Same little call against 28.50, which brings us to, all that being said, the bounce play, the bounce commentary, and the bounce trades, if you will, off of 27. But again, that's the XLF. So let's go ahead and take a look at the individual companies that reported earnings today. And I won't discuss, just for time's sake, what they beat, what was the number, what was the level. But just keep in mind, planning for these financials within that framework, that multiple stocks had a bounce play, and as we'll see, some of them are getting that target. So if you did have profitable positions, JP Morgan was a stock that we had discussed off of about 11-12.50, and we can extend this support bounce level, and that creates a double support level at 112 per share. Now we had this 120 that was tagged and exceeded on today's session. So JP Morgan is a target approved or target achieved into the prior high and just a little bit beyond it. Strangely enough, we all don't want to lose sight of this, especially once we do those scannings for new 52-week highs. JP Morgan, of all names really, would and does and is showing up on that list. JP Morgan made a new 2019 high, and that takes it to roughly a new 52-week high, which I think is quite interesting. Beyond that, we can look at BlackRock had earnings. You may not trade BlackRock, but just to reference it, and I don't do it either, but just a component bounce, same logic. And Don and I talk about correlated markets. If everything's going to bounce to the upside off of support, BlackRock is going to join it. So it's actually the roughly number 6th or 7th appreciating or bullish stock in the S&P 100. The first is actually UNH, but that's not a financial, that's a healthcare. But I think that's what's pulling us in terms of the strangeness of today. Yeah, financials are in focus. Yeah, we had good earnings and some earning beats, but this 8% gain with UNH, United Healthcare, that takes us right back into, we'll go ahead and update this into the box. And that box is, roughly speaking, $235 per share to about $250 per share. See the underside of the box, the breakdown, the short sell, and we're back inside. What does that mean? Well, that could lead to a bounce to the upside into 250 again, so look for that to happen. Essentially, once a market breaks outside of a volatility box or a rectangle or some type of trend line pattern and gets back inside, think of April into May, we often get a play or a movement to the other side. So if you want to play some aggressive bullish positions or a bounce play within UNH, I know it's not a financial, but again, that's driving the price action in the broader XLV. So just that's kind of the logic that I wanted to approach. Other stocks today, including earnings, would be in no particular order. Goldman Sachs. It's been a laggard, or at least a stock that's lagged others. Again, JP Morgan made new highs today, but Goldman Sachs, not so much. Nevertheless, it is playing into 210 per share resistance from here, and the other spot to watch would be 220. So Goldman might trade within what we call $10 blocks. So from 200, or from 190, or from roughly 180, all the way to the prior level. This might be best done for you with in-out spreads. So earnings, certainly, but it isn't to a pivot point which is just shy of 210 per share. And the logic is that we go push toward 220. And again, that gives you a little bit of a directional edge if we get above 210 and 209. And that will give you a spot to go long or spot to play into via intraday trades, right, bullish positions, or little bull flags on the way to the upside. And how might we visualize this? Just the prior two times. We had the breakthrough, and same logic. Breakthrough 200 takes us to 210. Breakthrough 210 takes us to 200. And support off 200 takes us to 210. Breakthrough 210 takes us to 220. And we can zoom in off that. That's my type of logic for any sort of option strategies that you already use. I'm just adding a little bit of a directional component and looking at key levels and what we call if-then logic, because we don't know the future. Wouldn't it be nice if we did? But we don't. And then Wells Fargo had its earnings that took it from, roughly speaking, it's already been on a bounce, from 44.50 to 49 into 51. And this trend line has been in play. So we have, notice how the market tagged means hit, touched, and then turned away from 51 per share. So that's something to watch as well. And a couple of others would be Citigroup. And Citigroup also is into resistance, not quite making a new 52-week high, a little bit shy of that, but nonetheless is into a resistance point. So essentially we're updating a prior video in terms of expect support, expect a bounce from support and a rally, and we're getting all those targets achieved. It just took some pretty good earnings to get us there. Of course, there are additional names that had earnings plays. You can always look at these and recommend doing this. We'll just finish up the video by discussing these components on the volatility charts. So JP Morgan, we can see its earnings play, how implied volatility creeps up and then crushes down. This is our probability of expiring cone. You can always look at the trade tab and put your trend lines within the context of these probability of expiring cones. See, if you think that Goldman Sachs or others or JP Morgan here is going to keep trading its way higher, there could be some premium sell opportunity at the upper end of the channel or premium sell opportunity beneath it. I would recommend keep playing within the channel, up, down, long, short, bull, bear. And then Goldman Sachs again, that's going to be a range play within the parameters, not looking for a lot, not asking for a lot for Goldman Sachs. Maybe other opportunities are better for us. And Wells Fargo, we saw it get stronger. And again, the parameters for it, and then BlackRock. So these are just component names to watch. $4.50 per share, and we look at the ADX, which is a trend indicator. ATR is a volatility indicator, and of course, implied volatility. All these things play into developing your own trading strategies as price moves toward or away from these levels. As always, be safe. This is Corey Rosenblum with your Theo Nightly video for October 15, 2019.